Welcome to another episode of Luxo-Life, your partner in life. Today, we're diving into how to invest in 2024 stocks for beginners. Stay with us to understand the basics of investing. Keep watching, and by the end, you'll be ready to begin your investment journey with less fear and more confidence. Before we begin, don't forget to give Luxo-Life some love. Let's start by talking about the point of investing. Imagine you have $1,000 that you worked hard to save. You could keep this money under your mattress or in a regular bank account. However, there's something called inflation, which you might have heard about in the news. Due to inflation, what your $1,000 can buy today, like a MacBook Air, might cost $1,200 a few years from now. This means over time, your money can buy less, which is why keeping it idle isn't the best idea. That's where investing comes in. By investing your money, it has the chance to grow over time, helping you keep up with or even outpace inflation. At its core, the idea behind investing is that you buy something now that will make you more money over time. When it comes to making money from your investment, there are generally two ways this can happen. Take buying a house as an example. You spend a certain amount to buy a house today. Then there are two main ways this house can start making you money. First, you can rent it out. This means you'll receive rent money every month, which is a steady income. Second, the value of the house itself might go up over time. So if you decide to sell it later, you could sell it for more than you paid, making a profit. If you just keep your money in a bank account instead of investing it, you might actually lose value over time because of inflation. Inflation makes everything more expensive, so your money buys less as time goes on. Houses are a great example of how investments can work because it's easy to see how renting out a property brings in money. Plus, most people understand paying rent, so it's a relatable way to see how investments can grow your money. But when it comes to other types of investments, you don't have this rental income concept. Instead, you buy things and hope you can sell them later for more money. The main exception to this is some stocks and shares, which we'll discuss more later in the video. There's a long list of these investment types that you might have heard of but aren't completely familiar with. You've got stocks, shares, and equities, which are pretty much the same thing. Then there are hedge funds and index funds. We've also got bonds like corporate and government bonds. You might have heard of people investing in things like watches and fine arts too. And then there's crypto, where people can make or lose a lot of money, but it can get complicated fast. So to keep things simple for the rest of the video, we're going to try to focus on investing in stocks and shares. That's because it's the main type of investing that regular folks like you and me can easily get into. You don't need a ton of money like you would for buying a house. You also don't have to take on big risks like you might with crypto. Plus, you don't need special qualifications like you would for some types of investments. So stocks and shares are basically the starting point when it comes to investing. When people talk about investing their money, they usually mean things like, I want to buy some Tesla, or I want to get some Netflix shares, or I'm thinking of investing in Amazon. That's what we're going to focus on next. Investing in stocks and shares is like buying a piece of a company. Let's say you want to invest in McDonald's. McDonald's is a company that anyone can buy and sell shares of. In an ideal world, you could just visit McDonald's website and buy a share of their stock, and then you'd own a little part of the company. But in reality, it's not that simple. You need a middleman called a broker to help you buy stocks. Once you've gone through the broker, you'll personally own a part of McDonald's, just like owning a piece of a pie. Let's break down how you can make money from stocks and shares. Share price income. When you buy shares of a company, you're essentially owning a part of that company. As the company grows and becomes more valuable, the price of its shares can go up. So if you bought shares at a lower price and the price increases, you can sell them for a profit. For example, if you bought a share of Company X for $10 and later its price rises to $20, you can sell it for $20 and make $10 per share as income. Dividend income. Some companies share their profits with their shareholders through dividends. Dividends are like rewards for owning their stock. Let's say you own shares of Company Y and they announce that they'll pay a dividend of 50 cents per share. If you own 100 shares, you'd receive $50 as dividend income. Companies usually pay dividends regularly, so it's a way to earn a steady income from your investments. Now the big question is, how do you decide which companies to invest in? Should you go all in on McDonald's, Netflix, or Disney Plus? Or maybe consider companies like Shell, British Petroleum, Ralph Lauren, or Unilever, brands you might already know? Well, let's refer to Warren Buffett's take on this. If you're a beginner to investing, unless you are legitimately a financial professional, you literally do this full-time for a living, you should not try and pick stocks. This is because picking stocks requires a deep understanding of the companies you're investing in, as well as the broader market trends. For beginners, it's often wiser to opt for diversified investments like index funds. But what the hell are index funds? Allocating assets to index funds is an uncomplicated and effective approach for spreading investments across various assets, which can be done with minimal effort or in-depth knowledge. These funds aggregate capital from multiple investors to replicate the performance of a specific market benchmark, such as the Dow Jones Industrial Average or the S&P 500, bypassing the need to select individual equities manually. The value of index funds rises and falls in correlation with the underlying index, providing investors with wide-ranging market involvement and diluting the risk typically associated with singular stock investments. A notable advantage of index funds is their affordability, making them particularly appealing to beginning investors. The expense ratios for these funds tend to be lower than those for actively managed portfolios because they are designed to passively track an index, not actively overseen by a portfolio manager. Over time, the lower fees can lead to enhanced investment earnings since costs can diminish the potential for compound growth. Additionally, index funds offer simplicity and ease of use. You don't need to spend time researching and analyzing individual stocks, making them an attractive option for those who prefer a hands-off approach to investing or have limited time to dedicate to managing their portfolio. Now let's discuss the common questions and concerns when it comes to investing. What if it goes to zero? What if I lose my money? It's understandable to worry about the possibility of losing all your investment. However, it's crucial to remember that investing in established companies or diversified funds significantly reduces this risk. While individual stocks can indeed decline in value, the overall stock market tends to rise over the long term, mitigating the likelihood of investments going to zero. Should I invest in crypto? While investing in cryptocurrency can potentially lead to significant gains, it's crucial to approach it with caution. Cryptocurrency markets are highly volatile and speculative, making them inherently risky. If someone wants to dabble in crypto, it's essential to only invest money they can afford to lose entirely. Investing should not be viewed as a get-rich-quick scheme, whether it's in crypto or any other asset class. Generally, if you want to invest your money in stocks and shares, it's pretty reasonable to put that money into a stock market index fund, like the S&P 500 for example. By the way, if you're still watching the video, let us know in the comments what's been your biggest concern about getting started with investing. What's holding you back? Lastly, let's delve into fast lane investing, an approach that focuses on investing in your own ability to generate income rather than relying solely on stock market investments. This strategy emphasizes leveraging your skills, knowledge, and resources to create wealth at an accelerated pace. Unlike traditional investing, which involves putting money into stocks or real estate and waiting for returns, fast lane investing prioritizes actively seeking out opportunities to increase your earning potential. One key aspect of fast lane investing is entrepreneurship. By starting your own business or pursuing entrepreneurial ventures, you can create multiple streams of income and potentially achieve higher returns than the stock market. Entrepreneurship allows you to leverage your skills and creativity to build scalable businesses that generate significant profits over time. Additionally, fast lane investing involves investing in personal development and education. By continuously learning new skills, honing existing ones, and expanding your knowledge base, you can enhance your earning potential and open up opportunities for advancement in your career or business endeavors. Investing in yourself through education and skill building is a long-term strategy that can yield substantial returns in terms of increased earning power and career advancement. Moreover, fast lane investing encourages strategic investment in assets that have the potential to generate passive income. This could include investing in rental properties, dividend-paying stocks, or other income-generating assets that provide ongoing cash flow. By building a portfolio of passive income streams, you can create financial stability and achieve financial independence more quickly than relying solely on active income from employment. And that's a wrap. If you liked today's video and found it helpful, please give Luxo-Life a thumbs up, drop a comment below to share your thoughts, and be sure to share this video with others. That way, we can help more beginners get started with investing. If you're new here, don't forget to hit that subscribe button and turn on the notification bell to stay updated on our latest videos. Thanks for watching and see you in the next one.